All right, Honors Econ. We're going to get into personal finance today. You're going to take just a little bit of notes on financial institutions. I'm going to put a slide up here. You're going to see a whole lot of words. Don't write all of this down. I want you to just simply summarize it. I'm going to talk about it. So hear what I'm saying. And then I want you to summarize this in your notes. You'll turn those notes in again on Friday. All right. Okay, so the state of Georgia, with their standards, they want you to know the difference between these four types of financial institution: banks, credit unions, payday loan companies, and title pawn lenders. Okay, most of you have a bank account. It's with one of your, it's with one of the big banks like Wells Fargo or Bank of America, something like that, right? Well, for most consumers, banks provide a safe means to store earnings. Typically, banks also offer direct deposit, check writing, debit and credit cards. Banks offer a whole host of other things like personal loans, home equity loans, business loans. You can even get student loans through Wells Fargo, stuff like that. Okay, so where I've got bank up here, I want you to just summarize this: that banks offer a host of financial services, everything from checking accounts to car loans to personal loans. There you go. Credit unions, they provide the same thing as banks. However, the difference between a bank and a credit union is you have to be a member of the credit union. Okay, so Delta Community Credit Union, that is for people that work for Delta. When I taught in Fulton County, I was a member of the Fulton County Teachers Credit Union. Not anybody can be a member of the Fulton County Teachers Credit Union. You've got to be a teacher in Fulton County. Okay, well, what is all right, other than that, what's the difference between the bank? Well, it's the banks are for profit, all right? They're owned by the shareholders, they're for profit. Credit unions are not so much for profit, they exist to help their members. All right. And they're owned by their members. Therefore, they can actually usually beat banks on things like interest rates. So whereas maybe you go to Wells Fargo and you get offered a mortgage, which is a home loan for 4.25%. If you're a member of a credit union, you might be able to go to the credit union and they give you like 3.65%. And the credit union might also be able to be a little bit more forgiving if your credit history isn't as good than maybe Wells Fargo. Okay, so if you have the opportunity one day, it's not a bad idea to join a credit union. Reason being, again, there's some advantages there where they can usually beat some of those big banks on things like interest rates, and they can be a little bit more forgiving when it comes to your credit history. All right, a payday loan company. I'm not going to read all that to you. I'm just going to kind of explain what that is. First of all, if you're ever in a situation where you need money quickly, you probably don't want to go to a payday loan company. The reason being is their interest rates are just outrageous. You would use a payday loan company. Let's say you get paid on Friday. It's Monday and you need to make some repairs to your car. You might go to a payday loan company and say, hey, listen, I'm going to get paid X amount on Friday. They're going to loan you the amount you need to get your car fixed. And then they're going to take that amount from your paycheck plus usually a pretty outrageous interest on that as well. Most people in these situations, they're going to use a credit card or something like that. But those people that usually don't have very good credit may have to go to a payday loan company. They exist. They're out there. Again, usually not a good idea because of the interest rate is so exorbitant, but people do use them. They are out there. A title pawn lender. All right, a title pawn lender isn't like, hey, I need to make some repairs to my car. I need some money kind of quick and I'll pay them back Friday. You might use a title pawn lender if you've actually just simply lost your job. All right, so actually what's going on right now, whereas people are in hospitality and they're losing their jobs, maybe working in a restaurant or something like that, they could actually go and hand over the title to their car, all right? And the title pawn lender is going to give them the amount of money that their car is worth and now basically own their car. However, you're still driving your car. So you've gone to a title pawn lender, you need a lot of money because maybe you've just lost your job. You have a car worth $7,000. You hand the title over to them, meaning now they own it. they're going to hand you $7,000, and now you're going to pay that money back and eventually get your title back, right? So you know that commercial, get your title back with Title Max. That's a title pawn lender company. Again, you're in kind of dire straits if you're using a company like this. Probably not a great idea, but people do use this. They are out there. You've obviously seen the commercials. Okay, that's it for today. These are your 4 financial institutions you got to know. We'll get into a little bit more tomorrow. We'll get into a little bit more various stuff, but kind of a light Monday there. Other than that, just make sure you've written down the notes for these 4 things. Again, you don't need to write all this information. Just summarize this in 2 or 3 sentences, and you are good. All right.